Hey, good morning, everyone. Brian Hoops here, Midwest Market Solutions, Market Insider TV opening commentary on Tuesday, October the 15th. Good morning, everyone. We are looking at some lower grain prices to begin the morning hours here. The dollar softly weaker, as you can see here on your screen. Crude oil down sharply, 4% losses here, $3 losses. I think we're destined to go back into the 60s. And without any war strife, we're looking at mid 60s before we find some sort of a tradable bottom. Had questions from people about locking in diesel fuel needs and energy needs. I don't know that I'd be in a hurry about doing that at this point in time. Let this market work its way lower here. Stock market is basically unchanged in light volume. And we have grains down 3 in corn. Soybeans down 9 cents. I'm looking at the January contract now with November having, if you're long November, you really need to roll out of it before the end of the month. And if you're short, do the same thing. Don't be stuck in there with the low volume, low open interest type trade with that contract going off the board next month. We have meal and oil down a little bit, and then the wheat is 3.5, 3.75 cents weaker in your night trade. And we're going to get kind of back to normal today as far as progress and reports and that information goes. I will not be doing RFD TV. It's my day off from that. I'll be doing it Wednesday, Thursday, Friday of this week, and as well as their Commodity Wrap podcast that appears on Wednesday afternoon. So let's talk about markets here and what is on store for us. And in the meantime, go to Twitter, go to our website, sign up for our Twitter feed. Also, Brian Hoops, Midwest Markets, get you some market information. At our website, you can sign up for our text message service. You can also sign up for our YouTube video series, our YouTube account, so that you hear videos like this and TV appearances, that sort of thing. A lot of our audio appearances on WHO Radio and Your Ag Network, that sort of thing, are also put on YouTube, and you sign up there to receive all this and subscribe to our YouTube channel. All right, so let's get into it and see what is on tap for today's action. All right, so we're looking at what we have in store for us, and regular rains are in the forecast for this week in Brazil and Argentina, as well as the 6 to 10 day outlook. We're returning to the more monsoonal type rains, and that is a bearish forecast for soybeans and for corn for that matter, as these return to these normal rainfall patterns give South America a good chance to get plantings done and ensure that they have enough moisture to get the crop out of the ground, and then there should be off to a pretty decent start, although maybe just a little bit later than normal. U.S. weather, it looks warm and dry for the next 10 days. That allows harvest activity pace to continue. There is some rains in the forecast for the plains and the dry winter wheat belt, which is badly needed, and that has winter wheat futures on the defensive as we pulled back from our recent highs off of this forecast. But right now there's really no issues with South American weather or U.S. weather. It looks ideal for both what they're desiring for right now. CONAB was out this morning. They estimated soybean production in Brazil at 166.05 million tons. This is down just slightly from September, with corn production virtually unchanged, 119.7 million tons. The big picture, you look at if they produce this crop of 166 million tons, we've heard as much as 172 is a possibility. Last year we were 151 to 152, so this is a big crop, much bigger than year ago levels, and we're already suffering compared to normal exports, and a lot of the China demand, I think, is covered through January if they have a normal crop at this point in time. Now we may get a little bit more Chinese demand as they fill in some needs here and there, but I think for the most part they've caught up to where they were a year ago, and they're not really in any hurry to add to that pace with this big crop coming out of South America. The corn crop would be about 4 million tons larger than last year's. So crop progress comes out today. That'll be at 3 o'clock Central Time. Weekly export inspections come out at 10 o'clock this morning. We also have the NOPA crush report. That'll be out at 11 o'clock today. And the average crush is 170 million bushels. That's a big rebound from last month, and 165.5 last year. Bean oil stocks estimated at 1.11 billion pounds. That's down slightly from last month, and virtually unchanged from a year ago levels. So this NOPA crush probably won't be a major market mover here, but good to see a average crush rebounding after last month, as we saw a lot of plants take some time to do scheduled maintenance. In the cattle market here, Friday we had cattle tenders, and those same 10 October live cattle contracts were retendered on Friday, that were tendered on Friday afternoon, were retendered Monday out of West Point, Nebraska. So they could come back with $1 to $2 gains attached to them. And as long as October is a discount to the cash, there is that threat of deliveries. And I believe these contracts had a much later date in early September, I believe, for those contracts. And Friday, coming up here this Friday, cattle and feed report comes out, 2 o'clock Central Time. Trade estimates should come in near 99% for on-feed supplies. Placements, 94.6, markings at 98.1. Probably won't have much cash cattle trade until Friday. And then once we do, we look for a little bit of advance this week. Cutout should hold in there, but if we do increase kills to 600,000 or more, those cutouts will begin to slip. Packer margins are $18 in the positive right now, so we do think that Packers will pay up this week for the cash markets. I'm going to sign off here, but wish you a great day of trade. Good luck, everyone, and as always, we hope we can help you with some marketing and trading ideas. This has been Brian Hoops for Midwest Markets. Good luck and good trading.